Ladies and gentlemen, we would like to start the afternoon session of Hitachi Investor Day 2021. The afternoon session will be from 1:10 to 5 o'clock. Once again, those of you utilizing the Japanese channel, you can also use the language selection button and you would be able to hear the original English. Please select the language that you would like to listen to from the lower portion of Zoom. According to your device, where the button is different, but in the case of PC, it's in the lower portion. We would like to now start the presentation of mobility sector. Presenting is Executive Vice President, Chief Environmental Officer, Mr. Alistair Dormer. Please wait for a moment. We will be switching the screen. Alistair-san, please.
Good afternoon, ladies and gentlemen. My name is Alistair Dormer, Executive Vice President for the Mobility Sector, and I am joined by Shinya Mitsudomi, CEO of Building Systems Business Unit here in Tokyo, and by Andrew Barr, CEO of Rail Systems Business Unit, joining via Zoom from London. With Andrew joining remotely, to hopefully avoid any technical mishaps, I will talk you through the mobility sector presentation and invite Andrew and Mitsudomi-san to join answering your questions. So please turn to page 1. I have 5 key messages to give you today. Number 1, we are ambitious and confident to outperform the market, targeting 1.85 trillion yen top line, double-digit profitability, and above 13% ROIC in 2025. Now, whilst the pandemic has been a very difficult management challenge, we are enjoying strong recovery in buildings, in China gaining #1 market position, and we have secured some amazing major new contracts for rail in the US. Number 3, we are focused on profitability and growth. During 2020, we launched transformation programs to reduce cost, improve competitiveness, and strengthen our global governance. We are targeting further growth expansion in Asia for our buildings business and expanding on our increasing presence in the US, aligned to the Biden administration plans for public transportation investment. Point number 4, we continue to invest in new technology to both enhance public safety and to play a part as a climate change innovator. And finally, we have acquired 2 notable companies and continue to divest non-core assets. Perpetuum is an intelligent IoT sensor company which is playing a key role in the connectivity of product designs, and Yungtai is a really great business and the #1 elevator company in Taiwan with bases in China. You may remember that Hitachi brought an initial stake in Yungtai back in 2018. However, we have now increased our stake to 70% and have agreed to acquire the remaining shares by the end of the year, which is really great news. Please turn to page 3. Now, this shows the mobility sector within Hitachi. Throughout the presentation, I will refer to the rail business as RSBU and our buildings business as BSBU. I apologize for the jargon. Let's turn to page 4. You can see our relevance. In 2020, mobility contributed 13% of the overall Hitachi revenues at 1.2 trillion yen, which was a 5% year-on-year growth compared to 2019, despite a very strong COVID headwind. Turning to page 5, let us have a look at the business units and leadership. RSBU contributes 45% of mobility revenues with a balanced portfolio of rolling stock and signaling and turnkey, topped up by a growing maintenance business. The business is fully global, with a presence in 38 countries around the world and a full product and service lineup. So let me introduce Andrew Barr, CEO. Andrew has been with Hitachi for 17 years and has been CEO of RSBU since April 2019. Andrew was previously CEO of Ansaldo SDS following the Hitachi acquisition in 2015 and has overseen the full post-merger integration of SDS into the group. This has established a truly global footprint for the rail business to build on. Now let me introduce BSBU, which is split between new installation elevators and escalators and service and solution businesses. In Japan, the market is very mature and our business is dominated by service. However, in China and Asia, the market is still growing strongly. So our new installation business is dominant, but with significant opportunities for expansion in our service business. Mitsudomi-san is a highly respected business leader who became the CEO in April 2020. He has immediately applied his global business experience gained from a career in Hitachi's global rail business to kick off the transformation program within BSBU, aiming for 1 trillion yen top line and 12% adjusted operating profit by 2025. Please turn to page 6. Now, let us look at the progress of our midterm plan. We plan to exceed our original revenue target of 1.27 trillion yen. As you can see from the chart, at the top left, our mix has changed, with top line reduction to RSBU caused by the COVID pandemic, offset by organic growth in BSBU, aided by a quick recovery in China and the consolidation of Yongtai. From a margin perspective, we expect to rebound in 2021 as the volume returns in RSBU in the second half of the year, and we continue the successful transformation of BSBU. Now, from an EBIT point of view, we successfully divested a second tranche of our stake in Agility Trains. As a reminder, Agility Trains was set up as two special purpose companies, Agility Trains West and Agility Trains East, to finance the purchase of the IEP trains in the UK. Following the successful delivery of the trains, we sold down the first tranche in Agility Trains West in 2018, and in 2020, sold down a second tranche in Agility Trains East. And in BSBU, we have been tidying up our portfolio of non-core assets, selling off some surplus land and buildings for redevelopment. Now let's have a look at railways in a bit more detail. Please turn to page 8. Now, according to the European industry body UNIFE, the global railway market is expected to grow at 3% compound annual growth rate to 7 trillion yen by 2025, which is solid. But the digitization of rail is expected to grow at 7% compound annual growth rate to 1.9 trillion yen by 2025, which is a great opportunity for Hitachi. The chart on the right side shows our relative market share, and it should be noted that this excludes CRRC, the world's largest railway supplier, but mostly a domestic player in China, and shows both Alstom and Bombardier Transport. However, Alstom has now completed the acquisition of Bombardier Transport, and this acquisition positions Alstom as the #1 global rail supply company, but this has the added benefit of elevating Hitachi Rail to global #3, which we believe gives us more opportunities in the market. On page 9, you can see the relative position of the business as we target moving to double-digit operating profit and 850 billion yen top line in 2025. We expect significant post-pandemic investment in public transport to boost economic activity and reduce CO2 emissions, particularly in Europe and the US, and recovery in emerging markets. We are the local leader in Italy, strong in Japan and the UK, And in 2020, we have massively delivered on our US expansion strategy that we talked about at our IR Day in 2019. Firstly, we secured a fantastic 84 billion yen contract to modernize the signaling for the Bay Area Rapid Transit System, known as BART, in San Francisco, which is a huge win for us on the West Coast, followed by a huge contract valued at up to 240 billion yen to supply new metro cars for Washington, DC. This new contract in Washington, DC will be supported by the construction of a new rail car assembly plant in the Washington area to serve our North American expansion, and it will be similar in size to our Newton Aycliffe site in the United Kingdom. On page 10, we show our strategy. Now, railway is a key technology for decarbonizing mobility, and we see the combination of green technology and Lumada to be the growth engine for the future. We expect strong growth in next generation signaling and smart infrastructure, where we can work in partnership with our recent acquisitions of Global Logic and Hitachi ABB Power Grids. In addition, we are following adjacent and disruptive technologies such as Hyperloop and have partnered to supply safety through digital signaling technology to watch this new technology develop. Hyperloop is proposed future mode of transport for passengers and freight using pods traveling in vacuum tubes to enable speeds of up to 1,000 kilometers per hour. Further cost reduction potential is good, with AI-driven predictive maintenance and analytics accelerated by the integration with Perpetuum. The Perpetuum sensors are self-powered and fit and forget, so give enormous potential for data harvest and analytics. On page 11, we showcase some of the exciting innovations and projects we are involved in to decarbonize rail travel. In the UK, we have a large fleet of intercity trains, the 800 series or IEP. Unfortunately, these trains were recently in the UK media as a few small stress corrosion cracks were found during routine inspection by Hitachi maintenance engineers. The fleet was temporarily withdrawn from service as a precaution. However, the fleet was safely restored to full operational service, and a repair plan is in work with our stakeholders. We sincerely apologize for the disruption to our customers' operation, but safety is our highest priority, and therefore we did not hesitate to take immediate action. I can assure you that this issue is a very local and specific issue to this train design and is not present on other Hitachi trains. This has slightly impacted profitability for FY21, which has been included in the forecast presented today. Anyway, these trains are very innovative and novel in that they can use either electric or diesel power. We have partnered with a UK company, Hyperdrive, to develop a battery to replace a diesel engine to study the feasibility of this technology and the potential across the fleet. In Italy, we are delivering hybrid trains using battery technology, and in Florence, we have successfully demonstrated a battery tram with the potential to remove ugly on-street power cables and reduce the disruption to cities implementing eco-friendly tram systems. And finally, here in Japan, we are launching a prototype hydrogen train in partnership with JR East and Toyota. So lots of exciting innovation. On the next page, we are demonstrating our support to the sustainability agenda. Our business contributes to environmental values, social values, and economic values, helping save the planet and delivering safe, comfortable travel to millions of people each year. The environmental value of rail travel is completely aligned with my role as Chief Environmental Officer of Hitachi, and we will be showcasing our latest eco-friendly rail technology at COP26, the Global Leaders Climate Change Summit in Glasgow later this year. On page 13, we have a risk analysis. The pace of global recovery from the pandemic is uncertain, but initial signs are encouraging. In Europe and North America, we are hearing positive news of post-pandemic investments, with figures of 2 trillion euros in Europe and $2 trillion in the US being committed. Page 14 provides a summary of what I've just said. As we target over 50% post-pandemic growth recovery and double-digit profitability, with recovery in all lines of business, supplemented by new digital opportunities such as mobility as a service. Mobility as a service covers a range of software applications, from smartphone location-based ticketing to further applications focused on the passenger experience, which we expect to grow in the coming years. In addition, we are working with a number of key customers who are seeking to transform their adjacent bus operations to electric bus. We have developed technology in partnership with our Lumada team to manage the various constraints introduced by batteries, such as range and optimum life management. And we expect many bus operators will face challenges as they migrate to electric, and we have some cool technology to help. Now, let's move on to Buildings Business Unit. Please turn to page 16. Here we see the macro trends affecting the buildings and elevator escalator markets, such as continued population growth and urbanization. These remain positive. However, the big acceleration we predict to be in the digitization of buildings, forecast to grow at a compound annual growth rate of approaching 15%, with significant potential for both cost efficiency and the creation of new revenue streams. On page 17, we are showing the relative market position of our business compared to the competition. Whilst we are smaller than the global top 4, we benefit from a concentration of our business in Japan, China, and growing markets in Asia. Our large installed base in Japan drives service efficiency, and our significant volumes in China is driving standardization and both the service potential through our rapidly growing installed connected base and the platforms for targeting additional growth in Asia. We have set ambitious yet achievable targets of 1 trillion yen of annual revenues in 2025 and global levels of profitability through a focus on standardization, scale, and digitization. For the first time in many years, we have seen changes at the top of the elevator sector, with ThyssenKrupp Elevators being acquired by private equity for over 17 billion euro, and Otis being separately listed. Now, both of these deals have shown how highly valued this sector is to investors, and our business plans take us to a similar size to Thyssen with a higher level of profitability. Moving to our management vision on page 18, we are focused on the potential of digital combined with a product refresh, driving standardization, and simple designs and ultra-efficient service offering by utilization of over 30 years of data from our installed base and AI. We continue to collect data on our large installed base of assets, and we see significant opportunities for additional digital services to add value to both building owners and tenants. The acquisition of Global Logic is an exciting opportunity as we look to co-create new buildings-related applications to build on our Bill Murray IoT platform to deliver additional value. We see expansion opportunities in our building solution business, utilizing the Bill Murray IoT platform, which can remotely monitor and integrate data from a wide variety of data sources with buildings such as air conditioning, elevators, and can monitor people flow to contribute to a building's efficiency and identify security issues. To complement Bill Murray, we have developed Bill Pass, which is a suite of applications targeted at building users to connect services within the community, which we expect to grow with ongoing innovation. We believe that the potential for digital within buildings is really significant. On the next page, page 19, our growth strategy is to accelerate business digitization, strengthen our service offering, and further streamline our cost structure. We will challenge to become a market leader in our core markets for building solutions through leveraging standardization of designs and delivering the benefits of scale to further drive down costs in both supply and service. Our brand remains strong as we are committed to safety and quality and further developing our key customer relationships. Throughout 2020, we launched our transformation program to further drive digital efficiencies through everything we do and deliver our full potential. I am confident that we can further exploit digital transformation and increase digital differentiation. We have become the majority shareholder for Yungtai and will be seeking to acquire the remaining shares by the end of 2021. We have exciting plans for growth for the business to deliver growth in Asia and open new markets in Tier 3 and 4 cities in China. Please turn to page 20. From a regional perspective, the Japan market has been impacted by COVID in 2020, especially with many new modernization projects delayed. We have worked hard to support and retain customers and look forward to a recovery from FY22 with our new UA21 standard offering elevator, touchless technology, and smart digital building co-creation with our customers. In China, demand recovered quickly in 2020, and we delivered a record number of new installations. We expect continued growth and see benefits from expanding into new markets with Yungtai and expanding our service business on the back of our expanding installed base. In Asia, we are strengthening our local presence and seeking further market opportunities with our competitive standard designs made in China. And finally, the efficiency and differentiation potential of digital is very much in our sights. Over the page to page 21, please look at our growth factors and risk assessment. The growth factors have already been covered, but from a risk perspective, the office real estate market is unclear as post-pandemic working styles are yet to emerge. However, we also see this as an opportunity, as real estate could be increasingly modernized and our transformation program will deliver better cost efficiency, increased standardization, and simplification of products and new digital services. And finally, for BSBU on page 22, we look at our impact on society and the environment. The pandemic has driven a lot of innovation in touchless and digital innovation to further safety and increase resilience to disasters. We have committed to the Hitachi target of 100% reduction in CO2 emissions from our manufacturing facilities by 2030. Through energy saving and switching to renewable energy, and are committed to reducing the impact of our products and services on the environment. In R&D, we continue to invest in research for energy savings, COVID-safe environment, and disaster protection. So in conclusion, on page 24, we show the top level numbers. We plan to grow by a further 5% for 2021, with profitability recovering in RSBU to pre-COVID levels. ROIC moves up to 10.6% and will be greater than 13% by 2025. On page 25, we look forward to a bright post-pandemic future for mobility. Business transition projects are underway and delivering early benefits, and we seek further expansion, building on our hugely exciting, massive contract wins in the United States for rail and the opportunities from the post-merger integration with the excellent Yungtai and expansion to our buildings business in Asia. So finally, on page 26, I want to leave you with our ambition. In 2025, we are setting aggressive yet achievable targets, shooting for 1.85 trillion yen top line, double-digit profitability, and above 13% ROIC. Thank you very much for your attention.
Thank you very much, Mr. Doma. We would now like to open the floor for questions. In addition to Mr. Doma, we also have Mr. Shinya Mitsudami, Vice President and Executive Officer, CEO of the Building System Business Unit, as well as Mr. Andrew Ba, Vice President and Executive Officer, CEO of the Railway System Business Unit, answering questions. Should you wish to ask a question, please utilize the raise hand button of the Zoom screen. After your name is called, please unmute, state your name and affiliation, and ask your question. We will be calling you by the name on the system. If your question is no longer necessary, please make sure to release it on the screen. And your video will not be shown in this meeting. We will take questions from the Japanese channel first, followed by the English channel. So the floor is open for the people on the Japanese line. We will take questions from institutional investors, analysts, as well as media. The floor is now open. Yoshizumi-san, please. Please unmute and ask your question in Japanese language. Question. Thank you very much for this opportunity today. I have 3 questions. I have a question regarding the building system. All 3 questions are for the building system. First is for the period ended March 2021. What is your view in terms of profitability? How do you evaluate the profitability, and talk about the background leading to this? In the first half, in China, mass market was acquired, and therefore revenues increased as well as earnings and profitability improved. But in the second half, profitability declined. After the Chinese New Year, did the mix change? What is the background? Please elaborate further for the period just ended. The second question is regarding China. Again, your take on that. Now, at some timing, seems that for new builds, I think there will be a harvest time in terms of increasing business, and it seems that the third quarter and fourth quarter, the profitability was declining. Do you think that the profitability is going to improve going forward? Please illustrate what is midterm, long term, and short term in terms of profitability. Now, you have talked about the ROIC of the building system. In the mobility system, ROIC overall is 10%. And I think it is going to be higher. Is it 20% for building system? Please talk about the ROIC for building system.
Mitsunomi-san, would you like to answer?
Thank you. Answer. To your first question regarding the 21 March period that's just ended, especially for China, you have asked a question regarding profitability and the background thereof. In terms of improving profitability for China, it seems that the second half has declined, but overall, it has been very stable in terms of profitability. So there is no source for any concerns. And regarding your second question, as you have rightly pointed out, for the Chinese operations based on new buildings, we have been able to grow our business. Demand remains very strong. And because of the structural reforms for renovations as well as new buildings, we have been able to grow our business. Going forward, the service ratio remains low. We believe that it will continue to increase. We have high expectations, but there is an impediment. The remote maintenance that is being introduced in Japan, where people do not have to be sent to the site, has not been introduced in China because of legal constraints. But we are moving toward deregulation of this. That means that the remote maintenance will be enabled, which will mean higher profitability from that type of business. In the time frame, it should be realized in several years down the road. To your third question, regarding our ROIC, in terms of a sector, we are discussing, but not as a BU. Therefore, I'm very sorry to say that we cannot respond to this question. But basically, the average for is better than the mobility sector average in terms of ROIC for our business unit. Thank you.
Next is Osaka-san. Please unmute yourself and ask your question in Japanese. Question. Can you hear me? In the UK, the class 800 and class 385, the issue with the rupture. Earlier, Dormer-san mentioned that it is limited to certain trains and it's not happening in the other trains. And the reason why it is not going to be seen in other trains is because of the design or the material. Could you elaborate on those points? That's my first question. The second question is related to Hyperloop. You talked about Hyperloop in the presentation. So how would you be taking initiative in the project of Hyperloop? If you could elaborate on that, I would appreciate it.
Thank you very much for two excellent questions. As Andrew Barr has been right in the middle of the Class 800 issues in London, could I ask Andrew to comment on those two questions, please?
Yes, thank you for your question. With regards to the issues on the Class 800 trains, they are quite specific to that design of train, which is only used in the UK. As was mentioned earlier, we believe this was stress corrosion cracking, which was exacerbated by the use of the lifting equipment of the trains in the depots. However, we are running the trains in service and we are confident that they can continue and are able to operate safely. We don't believe this issue applies to any other trains in the Hitachi fleets in other parts of the world. With regards to Hyperloop, it's quite an exciting opportunity for us to take part in that project. We joined it as input for the control systems for this, using our signaling technology. And we've been able to actually input a lot of work into the design of that system. And so we're going to be continuing to support the project as it moves forward. At this point in time, it's an exciting project which we're keeping an eye on, to see in which direction it takes next. But it's a good chance of being at the start of a project as this new technology develops. Thank you.
Yes, thank you. Next question, please. We will take questions from the English channel now. Those of you with questions, please indicate by the raise hand button. We still have some time left, so lastly, we will take another. I'm sorry, there is an English channel person wishing to ask a question. Bararin Kurbata-san, please unmute and ask your question in English.
Yes, I just wanted to ask about market opportunities in the US regarding rail business. So as you pointed out, the Biden administration is proposing to invest in transportation, I believe about $100 billion US dollars within the jobs plan. So I guess the two projects project wins you mentioned, the BART and the Washington DC projects are, I guess, not included in this upcoming investment. So should we think that these investments going forward, public investments should provide further upside to your current earnings forecast? Thank you.
Okay, thank you very much for your question. It's not clear to us whether the investments in BART and in Washington, DC were included in the Biden administration big numbers. But regardless of that, the market opportunities in the US look very, very positive. We have included growth in the US in our forecast because, as you can see, we are forecasting top line growth of 50% over the next few years for RSBU. And that growth will come in the US, but also will come in other emerging markets. So the good thing is we've been in the US for a number of years with our signaling business. We've now established a strong presence on the West Coast with BART, and we will be establishing our rail car manufacturing facility in Washington, which is very important for Buy America. So I'm very optimistic about our future potential in that market.
Okay, thank you.
Thank you very much. Any questions from the English channel? We still have some time, so we would like to take the question from the Japanese channel. If you have any questions, please raise the raise hand button. Hirakawa-san, please unmute yourself and ask your question in Japanese. Thank you for this opportunity. I have two questions. The first question, Dormer-san, in your presentation, you have mentioned about the CO2 reduction initiatives are going on. In the railway market, CAGR 3% is what you're aiming for. And the investment increase in the Western countries, would it be impactful so that it would go beyond the CAGR 3% level? That's my first question. My second question, in the rail system business, in improving the profitability, I think that you have named some items. Out of that, MaaS, what kind of sales are you envisioning, and what is the profitability that you're envisioning? And would you be conducting a low-cost operation with the plant in the US? How would you be able to conduct the low-cost operation? Those are the two questions I would like to ask. Thank you.
Very much for your good questions. Let me take the first one as I am Chief Environmental Officer, and then pass the second one to Andrew. So from a CO2 perspective, we are seeing enormous interest and finally, enormous amounts of investment committed to environmental infrastructure, both in North America under the Biden administration, as was previously mentioned, and in Europe, but also, plans now in place here in Japan and in China. We see rail as a climate change innovator. We see further investment will be put into rail systems. The 3% compound annual growth rate, I believe, is probably on the low side, considering we've just come through a pandemic and the fact that many governments are looking to make significant investments in railways to take people away from road transportation, which is obviously much less environmentally friendly. Andrew, could you comment on mobility as a service?
Yes, thank you for your question. Slide number 14 in the pack gives you a little bit more detail, and you can see the impact that MAS has on our projections to FY25 and also the consequential profitability increase. This is a new business area for us, so we're looking at adjacencies in our business. So where we already have good relationships with customers, particularly in places in cities, we're looking to expand that by using other parts of Hitachi, particularly digital and our partnership with Global Logic, to actually enhance people's journeys by adding digital impact to their overall journey through things like information and the management of the complete total rail system. So it's quite an exciting development for the overall business. And as you can see, actually makes quite a difference to the way that the business will perform. With regards to the Washington plant, that's a very important new plant in our business. We want to make that successful and to continue to deliver for many years to come. So we're looking to make sure that we target key opportunities for rolling stock in the US that enable it to have a strong performance, and in particular to be profitable. So we are already, in addition to the Washington order, looking for other orders that can follow on to enable us to keep that plant performing well into the future, in line with the investment that we've already heard that's being made by the Biden administration. Thank you.
Thank you very much.
The time has come to bring this session to a close on mobility sector. The next session will start at 2 o'clock on the topic of the energy sector. Thank you.